Hi guys, this basically summarizes everything that I have done in the last month. So I'm going to play what is an hour and 15-minute recording so that you can hear what it's like to be the world's best Roboadvisor. Okay, after a CFTC exemption as a CTA to be a Roboadvisor 401A3C, that's my CFTC exemption. I am also SEC exempt, and I'm an SRO, and I'm a Securities and Commodities Exchange operator, and I have a Financial Economics, Bachelor's of Science, and Math minor. So I'm also 2 classes away from Computer Science minor, but that didn't matter to me because I'd already studied as a Mathematics, Science, and Computer Programming high school diploma. So enjoy the view. That's my view of my closet, and we're gonna listen to this. And if I comment, I apologize.
All votes. All and finance. 2 hours ago by Bo Valinsky. Currently was way too non-specific about the question of random stock picking due to the assumption of perceived market efficiency and / or inefficiency, and I do mention my strategies, but I'm showing how I have come to recognize the 6 stocks fun. It's were really efficient. Should I just pick up at random any stock in the market? WealthSignals.com, author of Etf Pairs Arbitrage by BWO. 2 hours ago. If you think the balance sheet doesn't matter, please just buy an index fund, since you are asking an ignorant question in terms of what effort you put into identifying stocks to invest in. At random, it's like the jerk and the rifle murderer opening the phone book and picking out Johnson, Maven, R. Clarification to the question of inefficiency or perceived inefficiency of all equities balance sheets. Response without being so glib. He has a balance sheet, that's true. But what markets cannot ever predict is innovation. That's part of the future, and what goes into pricing a stock is predicting how profitable their next newest product will be without hopefully but usually cannibalizing their current products. Cannibalization is what happens when, for instance, a new team is founded in various professional sports, and because the dollars meant to entertain at other local smaller venues are disenfranchised, this means less revenue for those venues, and the larger venue is actually reducing profits in that sense. So always suggest looking at a balance sheet, but the only balance sheets I look at are ones with at least double-digit return on equity percentages. Only metric that actually reflects how much cash is going into the earnings per share of a company, so that what's left over net of tax is not what gross revenues and COGS, cost of goods sold, says, but what makes it into the book value is directly proportional to the value of the book of the company. So if book value increases, the value of the company increases, but that is only done mainly in 5 securities: FB, AAPL, AMZN, NFLX, GOOG, and MSFT. All cash and nearly every revenue they receive flows at high 20% rows to the balance sheet, and that is how to measure the growth rate of a company. Without looking at a balance sheet, you need a history of the row, or have to calculate it if your broker can't provide any financials for you to analyze, and taking them from the company's website is not a viable solution for anyone. Which is why I use Fidelity Investments to analyze these 6 companies to keep track of my TQQQ and SQQQ returns on Star App Superbands and Etf Pairs Arbitrage strategy is because those 6 corporations are most of the index one trade in. Over 80% of the index is those 6 companies, and most of their balance sheet is cash, meaning the row above 20% indicates that they are taking in revenues for which every $2 of $10 goes directly to the bottom line, and that is why stocks aren't efficient. They hold truths to be self-evident, and in the countries where they are domiciled, their tax treatment is neither the same nor relevant unless prepared under GAAP, generally accepted accounting principles, which properly accounts for various operations of every company, especially fund. Again, which is 80% of my index. So when I go long TQQQ off a QLD trade on wealth signals, I am actually exposed by 240% of my equity in those trades, and when I go long SQQQ off a QID trade, I am short 240% of my equity in those trades with fantastic results simply because I know GARP. Reasonable price is why every stock could be justified as an investment, with ROE's return on equity percentages at least in the double digits, but more around 20 to 30% is when cash hoards like those stocks have started to build, and each CEO and owner of those companies is outstanding at managing their balance sheet, because if the WACC weighted average cost of capital can actually be predicted by companies issuing guidance, then you can predict how much their bottom line or book value will increase. But this is done over a history of financials and decades of performance which no IPO or unicorn can ever indicate. It's not a fluke that nearly everyone on earth uses those corporations' products, and it's also not a fluke that they have over $50 billion in cash or equity that they earn a return after all interest and taxes are paid to make and row in 20+% range. By GARP mainly that I would recommend any of those stocks as a 100% long, because I am confident they will all be around 40 years from now, and unless you can say that a company has no chance of bankruptcy in the next 40 years, it really isn't as simple as assuming markets are efficient, because I just use statistical arbitrage and pairs trading while picking an index where I know that the rows of more than 80% of the index is so high that we're nearly certain about guidance and know what earnings will be, and that is only true of technology companies in the Nasdaq 100 with over double-digit rows much past 20% as their return on equity, because the row is the only metric that measures how much return shareholders actually earn. So maximizing row is the same as maximizing GARP for the balance sheet. And with that, I'll leave investors with this to ponder, because what I've discussed is part of a 2-decade learning curve to try to emulate the strategies I've created running off 3 soft and also by only focusing on the index where I am nearly certain will earn at least 20% row on all of the fund, which finally is FB, AAPL, AMZN, NFLX, GUG, and MSFT fund. Start as an early investor by studying these companies' balance sheets, because if you can predict which companies are scalable, that is, possible to generate hundreds of billions in revenue without being some Aramco whose earnings are nearly perpetual but will eventually cease due to lack of product availability, and so in Aramco's case they make very little row because it is a commoditized business, and comparing that IPO to what all of the FANG are doing with their business is in optimizing the weighted average cost of capital, and in so doing maximizing future shareholder value that no other companies have ever been able to do. 7 view sharers answer requested by friends. Upvotes. It all. Upvotes. It all. Linsky, wealthsignals.com, author of Etf Pairs Arbitrage by BWO. 8 hours ago. Is something that marks you as a pattern day trader, so I've shown the day trading algorithm C2 star app superbands, but you can also see my credential as another form of trading using stat arb pairs trading as its logic and basis. Best day trading strategy and what? Wealthsignals.com, author of Etf Pairs Arbitrage by BWO. 8 hours ago. He answered, what are the most successful day trading strategies, and what? Remove banner. My credential was Best Roboadvisor from 2015 to 2017 by Wealth and Finance International magazine, and won Excellence Award in Quantitative Finance also in 2017. So to answer your question is complicated, because what I do on Wealth Signals is stat arb pairs trading and doesn't day trade. So if you want to know, here is the most successful day trading strategy one have. Star app superbands. Quanticula. Index with one modification to the entry. Bands, and you can backtest it on any symbol list you want, but it's just for day trading equities. My credential is what I do for a living and with my personal and family directed investments. 107 views view upvoters view sharers. Voted this. Vote. Upvotes. All. And Finance. 8 hours ago by Bo Valinsky. Is something that marks you as a pattern day trader, so I've shown the day trading algorithm C2 star app superbands, but you can also see my credential as another form of trading using stat arb pairs trading as its logic and basis. Best day trading strategy and what? Wealthsignals.com, author of Etf Pairs Arbitrage by BWO. 8 hours ago. Fully answered. What are the most successful day trading strategies, and what? Remove banner. My credential was Best Roboadvisor from 2015 to 2017 by Wealth and Finance International magazine, and won Excellence Award in Quantitative Finance also in 2017. So to answer your question is complicated, because what I do on Wealth Signals is stat arb pairs trading and doesn't day trade. So if you want to know, here is the most successful day trading strategy one have. 2-star app superbands. Quanticula. Index with one modification to the entry. Superbands, and you can backtest it on any symbol list you want, but it's just for day trading equities. My credential is what I do for a living and with my personal and family directed investments. 107 views, view upvoters, view sharers. Upvoted this. Vote. All. Upvotes. All. Best day trading strategy and what? Wealthsignals.com, author of Etf Pairs Arbitrage by BWO. 8 hours ago. We answered, what are the most successful day trading strategies, and what? Remove banner. My credential was Best Robo-Advisor from 2015 to 2017 by Wealth and Finance International magazine, and won Excellence Award in Quantitative Finance also in 2017. So to answer your question is complicated, because what I do on Wealth Signals is stat arb pairs trading and doesn't day trade. So if you want to know, here is the most successful day trading strategy one have. Star app superbands. Quanticula. Index with one modification to the entry. Superbands, and you can backtest it on any symbol list you want, but it's just for day trading equities. My credential is what I do for a living and with my personal and family directed investments. 107 views, view upvoters, view sharers. Voted this. Voted. All. Well, illegitimately? Linsky, arbitrager, 2006 present. Son. The answer is through insider trading with friends who appear to have no conflict of interest, passing information that both material and non-public to civilians. This is particularly how nearly every Democrat candidate made their money, including Biden and Warren. Views. Upvotes. All. Someone secretly had infinite money. Linsky, CFTC exempt CTA, CPO, SEC exempt IA Securities and Commodities Exchange Operator. Son. Trillion infinite? I think not. It's still finite, but it's needed to reinforce the electrical grid from EMP attacks. Use view upvoters. Upvote. Warrens, DMOC, wealth tax destined to become U.S. law. Why or why not? How should one prepare? Linsky, arbitrager, 2006 present. Son. Has little to no chance of winning the Democratic nomination and is too socialist to ever get any shot at president. Mentioned she is making a case for what would ruin the economy as it has been established currently, so, no reason to worry about a socialist president of the USA. 3 views, view upvoters. Votes.
Of course, I believe that.
Voted all. Saving 10% of your earnings get you rich eventually.
Will saving 10%
Linsky, wealthsignals.com, author of Etf Pairs Arbitrage by BWO. Son. You'll have to have returns that beat the S&P 500 as I show here. How to make more money using purely mechanical stock trading.
Let's go.
Views. Upvotes.
This is that link. How to make more money using purely mechanical stock trading. Let's listen.
To make more money using purely mechanical stock trading. Etf Pairs Arbitrage is one of the best long-standing strategies we have ever seen, earning over 560% compounded return since March 3, 2015. Who's that lays golden eggs? Etf Pairs Arbitrage, EPA, developed and published by Bo Valinsky, BWO, is fully mechanical in nature. That means it takes the human equation out of trading and produces trading signals through pure technical analysis by mathematically analyzing stock market data. Look at these stats. Prime profit approaching 600% with current 54.36% APR. Last year earned 91.69% in 2018 when the S&P 500 was down -6.24%. Is 22.05%. Averages 2.5 trades per month, incredibly easy to trade. BWO's average forum response time to subscriber questions is less than 12 hours. Trading results for the last 5 years have beaten research results going back 10 years. Winning best Roboadvisor 3 years in a row. Line, make more. Work less. Technical word on Etf Pairs Arbitrage, EPA, from BWO. Uses Chebyshev's theorem of 1865 and the 1895 empirical rule of statistics to compute one of the 3 possible ranges of values for the market. Value question: when does fair value happen? The answer is after normalization. So this is a normalized volatility-based overbought oversold threshold. Valued, and our favorite. Valued. The human intuition I really have is to take Armageddon events seriously, and, if one were to appear, I have a fail-safe overlay to just exit the position and wait for normalysis to take its power over the market once again. Emotion plays no part in my wealth signals. Your next mechanical strategies performance details. Would you rather put your money?
Yeah, where would you rather put
$1,000 investment following the S&P 500 since EPA's March 3, 2015 starting date would have compounded to approximately $13,024 today, but the same allocation of capital following the EPA strategy would be worth $63,188.
70 now.
That's 17.59 times greater return on investment.
So 600%.
The S&P 500 vs Etf Pairs Arbitrage, EPA. Earns by year. S&P 500. 2015. 1.58%. 3.6%.
33.6.
5.18%.
5.18.
2016.
11.89.
0.89%.
EPA 34.7.
4.7%.
Down on 23%.
2.81%. 2017. 1.53%. 3.1%. 8.57%. 2018. 4.54%. 1.7%. 6.24%. 2019. 0.3%. 2.05%. 0.75%. 0.57%. 131.88%. 101.31%.
That's what you miss out on.
0.49%. 4.36%. 37.87%. Frequently asked questions. Wealth Signals. Signals is a marketplace for strategy authors to sell their trading alerts to subscribers without giving away their intellectual property, the strategy itself. Signals results real. Enrolling is live, but Wealth Signals displays hypothetical results based on real market data. In practice, if you trade a market order EOD strategy like Etf Pairs Arbitrage, you can duplicate trading entries and exits by placing market on open orders with your broker. Does EPA deliver signals? Signaling usually occurs shortly after the markets close. Wealth Signals transmit signals and updates to subscribers by email. Subscribers can also access signals by logging into the systems page. EPA's average investment size. Subscribe to a Wealth Signals strategy, you will enter the allocation of capital that you intend to use to trade the system. This allows Wealth Signals to send you the correct position size for signals. Allocation entered by subscribers varies greatly from $10,000 to more than $400,000, averaging approximately $50,000. Makes us experts. The team who created Wealth Lab, one of the top-rated technical analysis software in the world, now owned by Fidelity Investments, but still supported by us, also created Wealth Signals. For nearly 20 years we have been rubbing shoulders with mechanical trading system authors from all over the world, problem solving, creating new charting extensions, analysis tools, and data solutions, and just improving financial data research. Making WealthSignals.com was a way for us to encourage and update, EOD, system authors to share their talents with the world. We expected great things, and we weren't disappointed. Your next mechanical strategies performance details. Here.
Let me show you this. This is going to say, this my strategy description. So I can only read from this computer, and that's why this may have feedback.
Strategy description. Strategy logic. Analyzed volatility-based overbought, oversold threshold statistical arbitrage pairs trading by an artificially intelligent genetically optimized average profit to drawdown, APD, ratios and creator of the APAD average profit to average drawdown ratio in Fidelity Investments Wealth Lab Pro 100% systematic trading algorithm. 4-year anniversary backtest as of March 5, 2019 from July 10, 2006 on /or all QID and QLD data, below. Trades benchmark buy and hold, QLD, starting capital $121,000, $121,000 ending capital $13,812,741,806.64, $2,671,178.60 net profit $13,812,620,806.64, $2,550,178.60 net profit percent 1141538.9.10% 2107.59% annualized gain percent 150.15% 27.59% exposure 165.14% 113.21% total commission $1,123.65 $4.95, return on cash $45,748,626.28, $0 margin interest paid, $145,975,667.28, $25,883.60. Dividends received $3,575,448.95, $98,089.35. Number of trades 114. 1 average profit $121,163,340.41. 2,550,178.60 average profit percent 5.13%, 842.22% average bars held 19.25, 3,195.00 winning trades 87, 1 win rate 76.32%, 100.00% gross profit 14,388,001,276.35, $2,477,972.85 average profit 165,379,325.02, $2,477,972.85 average profit percent 8.18%, 842.22% average bars held 19.23, 195.00 max consecutive winners 9-1 losing trades 27-0 loss rate 23.68%, 0.00% gross loss $478,728,877.66, $0 average loss $17,730,699.17, $0 average loss percent minus 4.71%, 0.00% average bars held 19.440 max consecutive losses 40. Drawdown $2,299,364,452.70, $1,412,560.64. Drawdown date December 24, 2018 12/24/2018 maximum drawdown percent minus 69.04% dash 103.65% maximum drawdown percent date August 19, 2011 March 9, 2009 Wealth Lab score 28.15-0.89 Sharp ratio 1.86-0.18 Profit factor 30.05 Infinity recovery factor 6.01 1.81 Payoff ratio 1.740 Profit/total bars $4,321,846.31 $797.93 G watch list ID, QLD, TQQQ, and SQQQ can also be traded for 50% higher returns and with margin at Fidelity Investments at a 75% debt-to-equity ratio for up to 50% and 30% higher returns. And if you intend to order trading NASDAQ 100 E-mini futures, note the delta hedged leverage factor, DHLF, against the market should not exceed 5.63 to 1. Investment instruments that track the NASDAQ 100 are all perfectly acceptable as substitutes, but the above are the only instruments that this trading system is recommended to use. This algorithm's duration of holds prevents options from being traded in it, so please do not trade my algorithm Etf Pairs Arbitrage with options. New E-mini micros for the NASDAQ 100 are now available as of May 2019, and so long as you understand the mathematics of the DHLF you should be able to trade them as well, and as with both just roll if you're in the trade on the day of roll. The hedged leverage factor is a mathematical calculation to arrive at the leverage factor that will allow you to emulate the highest leveraged version of Etf Pairs Arbitrage, which is computed as follows. E-mini point value times $20 per point is the notional value, and you divide that value by 5.63 to get the amount required to trade at the maximum DHLF for this strategy. Micro E-mini point value times $2 per point is the notional value, and by dividing it by 5.63 you can use that amount as the amount to use per contract in micro NQ E-minis. Management. 57% of equity is used in the Etf Pairs Arbitrage strategy, but with a 75% debt-to-equity ratio allowed in Fidelity Investments where I trade at, I do the following: 2.44 MF, 238.1% of equity in this strategy, and the backtest above. The maximum amount of risk is shown with a DHLF of 5.63:1 against the NASDAQ 100. In practice, Using a 75% debt-to-equity ratio in TQQQ and SQQQ can also be used with the same timing for QLD and QID trades, respectively. This strategy is long only, and will require you just to place orders when you receive the signals with a market order either to buy or sell, and, occasionally, for those of you with margin and rate T margin, an order to sell with an order to trigger a buy in the contra. Orders requiring auto order types are rare but have happened in the past, so by selling a position with an order to trigger the order to buy the contra or the inverse is how to reverse, but these are very rare cases and shouldn't happen very often. My money management uses 97% of equity in QLD and QID in the strategy shown. The correct calculation to convert to the 3x instruments TQQQ and SQQQ is exactly equivalent to 0.97 carat 3 halves equals 95.534%, which is the amount of equity to use when trading 3x instruments without margin. Trading with 75% debt to equity in TQQQ and SQQQ or a 195.5% of equity position in QLD and QID are equivalent to each other, and each backtest starting from 97% of equity in QLD and QID to 75% debt to equity in TQQQ and SQQQ, up to the maximum recommended DHLF of 5.63 to 1 are the best variations to use to get the performance summary shown above. A 75% debt to equity ratio in TQQQ and SQQQ means 133% of equity is used to trade the equivalent of 195.5% in QLD and QID. So if you are going to use 4:1 leverage to limit your risk without using futures, these percentages of equity are equivalent because they are both 4:1 leverage factors, and if you are going up to 4:1 then using TQQQ and SQQQ with a 75% debt to equity ratio is equivalent to the 195.5% of equity in QLD and QID and will save you on margin interest, which is what I do in my brokerage accounts, which I've disclosed from my Active Trader Pro what my actual results are. These are the various ways to deploy Etf Pairs Arbitrage. I would have higher returns showing in my live results where I've disclosed them in the forum, and plan to release my lifetime returns on a semi-annual basis for you to judge, but be aware that prior to 2011 TQQQ and SQQQ were not available, so the highest leveraged form of my algorithm can only be obtained through either NQE minis or micro NQE minis, which the micro NQE minis became available in May 2019 and can be used with smaller accounts than those required to trade the full NQE mini vs the micro NQE mini. Me. World Omni Media aka BWO, President and CEO, SEC exempt IA, CFTC exempt CTA, CPO, Managing Limited General Partner, Securities and Commodities Exchange Operator, Quant and Arbitrager, Bachelor of Science, Center College 2006, Financial Economist and Mathematician, Computer Scientist, Official Title KC Capital Management, BWO, World Omni Media and the Kansas City Stock Exchange President and CEO, CFTC exempt CTA, CPO, SRO, and MLGP of FUP MEL, Wealth Signals author, Arbitrager, Securities and Commodities Exchange Operator, SEC exempt IA, Mensa Prometheusavant, age 17, at https://www.benzinga.com/fintech/18/01. Best advice any advisor or robo-advisor can give is the advice he gives to himself. Nexologi, circa 2001. Quad intellectual, animi, mentis et socialis et facies est vitae essentia. The intellectual, psychological, and social aspects of the mind are the essence of life. Nexology is a study of time related to my approach to analysis of historical significance in the context of the three aspects of the mind named above, and this exact quote is taken from the founding of Nexology submitted in my 2001 application to be a Kentucky Governor's Scholar, which earned me the Brown Kernel Scholarship for my BSc in Financial Economics and minor in Mathematics, 2 classes away from a Computer Science second minor, but with a triple major at Boyle County High School in Science, Mathematics, and Computer Programming. Also a Mensa Promethi to Savant for performance, resulting in offerings of bonus checks for being the third highest nuclear aptitude proficiency test to the United States Navy's Nuclear Power School, which I resigned from due to extenuating circumstances to pursue high finance. Corporate web page, https://www.kccmbwo.com. Anything else? Omni Media, BWO, proudly presents the Etf Pairs Arbitrage Trading System. BWO is the channel of trading signal distribution of KC Capital Management Inc. Trading Signals, where WO stands for KC Capital Management, BO World Omni Media. BO World Omni Media is my success team interview, where you can see me as I am in my home trading room discussing my life as a quant. https://udo.be/hqsq_4mir system description for new margin rules and $10,000 units allocated forwardly by 97% of equity. No price increases are ever going to be a part of Etf Pairs Arbitrage. Cirque Menotnanoj and Cirque Kite Point 2015, 2016, and 2017 Fund Awards for BWO's Wealth Signal Etf Pairs Arbitrage Best Pairs Arbitrage Trading Program Best Hypothetical Results, USA, 2017 Best Pairs Arbitrage Trading Program USA Excellence Award in Quantitative Finance 2017 https://www.wealthhandfinancenews.com/KC Capital Management 2018 W&F Mag Best Trading Systems Marketplace Provider, USA. Moore's Who's Who. 2019 W&F Mag Best Trading Systems Marketplace Provider, USA. Strathmore's Global Who's Who Lifetime Achievement Member https://theglobalwho'swho.com/search/bo-valinsky/90n6td5p times 2. WO was first runner-up in the Benzinga FinTech Awards for Best Roboadvisor, or fourth overall. Etf Pairs Arbitrage, since switching to WS2, has no subscriber count maximum and is suitable for all accounts and all instruments for trading, hedging, speculation, and for use in arbitrage of Nasdaq 100 indexes. I was honored to be interviewed by Wealth Signals about my performance, so I am putting the link to the interview here for people looking in the forum of my great strategy Etf Pairs Arbitrage at https://www.
Here's the interview. That's what I'm going to end with, because I'm using too much energy.
Interview with BWO. BWO is an author of one of the leading strategies on Wealth Signals. His strategy Etf Pairs Arbitrage is around for over 4 years by now and has gained over 500% during this time.
700.
Your strategy Etf Pairs Arbitrage, EPA, has been one of the top performers on wealthsignals.com for several years now. Congratulations on this achievement. How did you get started as a quant, and how long have you been developing trading systems? Wealth Signals. I have been a quantitative developer and analyst since May 2003. At that time, I was taking a course called Theory of Investments at Centre College in my Financial Economics Bachelor of Science Mathematics minor. And then my family decided to compete in the financial markets with me as general partner of what we called the Nexial Investment Club Partnership, split equally amongst the immediate members of my family. The history of EPA. Realized that I was going to inherit some money that could become a fantastic fortune within 10 to 15 years, and so 6 to 8 months after QID and QLD began trading around July 2006, on March 21, 2007 I perfected pairs trading QID QLD scalper. I was already looking for algorithms to use and found them at an undisclosed location on the web. Long since gone are its explanations and histories. However, since my majors in high school were mathematics, science, and computer programming, I knew that either of these two strategies would deliver significant wealth to me and my family when deployed accurately. After a spat with my broker/dealer about offering these types of strategies, I went to what I believed was a more compliant web service through interactive brokers called Covister. Then I went to World Cup to be an advisor and CTA, and was a trade leader at both. I had an outstanding record there. when I made the decision to join Wealth Signals, I had to terminate that relationship, and that is why I am here earning way more than I did on any other site offering the types of mechanical and statistical strategies that are like what Wealth Signals offers, just EOD for now, but that will likely change to RT in the near future. A fully mechanical in nature, or do you allow any of your own intuition in the signals? No intuition to the primary alpha, which is my wealth signal to trade. It uses Chebyshev's theorem of 1865 and the 1895 empirical rule of statistics to compute either of the three possible ranges of values for the market. Value question: when does fair value happen? The answer is after normalization, so this is a normalized volatility-based overbought oversold threshold. Valued and our favorite. Valued. The only intuition I really have is to take Armageddon events seriously. And, if one were to open, I have a fail-safe overlay to just exit the position and wait for normalisis to take its power over the market once again. Emotion plays no part in my wealth signals. To approach trading system development in a scientific fashion, starting out with a hypothesis such as piggyback a strong breakout or prices revert to the mean. What assumption did you intend to validate when developing EPA? Mathematics from my associate's equivalent at Center College explained that these two theorems named above, Chebyshev 1865 and empirical rule of 1895, show the percentage of data above and below the mean. This would only be intuitive to someone like myself, but, not to be glib, it was not exactly prices revert to the mean or mean reversion, but it was mean reversion through normalization or prices revert to the mean by normalisis. So that was what I was trying to prove along with my linear regression analysis tricks. That often in wealthsignals.com, a publisher will submit backtest performance for their trading system, but then over time the actual performance will not live up to the backtest results. This could be due to over-optimization, survivorship bias, or other reasons. EPA, on the other hand, has actually shown a higher out-of-sample performance. Do you have any insights into what? I do. It's from incorrect data pulls and the amount of data involved in each simulation an author submits to Wealth Signals. The only reason it takes tens of seconds for me to issue the EPA Wealth Signals strategy orders is because I have to make sure the data is correct before I submit my decision to Wealth Signals, and for me it comes down to whether the prices are the same as my terminal in Active Trader Pro. Every trading day I have to check data before submitting signals, and on days when I have signals to issue orders to Wealth Signals, I use the order entry publisher from Wealth Signals at 97% of equity and then a numeric value to sell and slash or reverse. Optimize or tweak EPA periodically, or has it remained as is since its inception? Syntax only. No logic changes in 5 degrees of freedom out of 6,500 bars when combining QID with QLD and some linear regression analysis similar to that used in every one of my publications. I used to be Nexiel_10020002 on the old WL4.WL site, and it was on there that I found fame through my presentation to the Kentucky Math Association in May 2005 at my alma mater as a junior, entitled Dip Buying Using Bollinger Bands. Regretfully, until about 1 month ago, I had to declare that the strategy could not be implemented due to technological infeasibility. This has changed with the advent of Quanticula. And this infeasibility declaration was also true for many years of people who counted my algo out as I was watching it accumulate massive 30% quarters nearly every quarter, which is what it feels like to me when I see my TQQQ and SQQQ returns. Etf Pairs Arbitrage, as its name implies, is traded on a pair of ETFs. Have you tested the logic on any other assets, different ETFs, international ETFs, stocks, futures? If so, how did it perform? They have to be perfectly negatively correlated instruments to be pairs first off, and second, if you were to use these models on SSO/SDS, MVV/MZZ, DDM/DDZ, etc. Yes. I've tested on all of them from WL4 but not the current .NET version, and they were very good performers. It's just that S&P 500 was always dip buying, mostly due to oil and very correlated with the dollar index, so after simulating a hypothetical $1,600 back price on QID and a $1 starting price on QLD, the system does have validity back to 1985, and that's as far as I can see CBOEs and DX when these instruments became possible to simulate. Developing any new trading systems that you'd like to mention? 1. And one of my favorite achievements, superbands. I'd like you guys to visit my Facebook Algo Shop at BWO's page so you can compare the two algorithms my family trades and plans to trade and offer forever, as these will have the back-tested equity curve that can now be followed through with signals. You can go to it here, https://www.facebook.com/kccmbwo/shop. I was instrumental in the development of the Quanticula Studio Wealth Signals Broker Adapter, which I think is a magnificent step forward for the industry I'm a part of. Do you have any advice to EU residents who want to trade EPA but cannot due to trading restrictions on US exchange trades products? Double leverage just means 2x leverage. And 3x leverage. To convert from 2x leverage is the 2x return raised to the 3 halves power, and you can go up to 5.63 to 1 to get the returns that I get in futures markets if you remember these procedures. Your delta hedge leveraged factor. What is a delta hedged leveraged factor? Say you have $140,000 and NQ is trading at 7,000. These are equivalent, and so when NQ loses 70 points your equity will drop by $1,400 because 70 points times $20 per point is that value and is equivalent to 1%. So by dividing $140,000, if NQ is at 7,000, will require you to divide $140,000 by 5.63 as the amount per contract you can trade in futures. Flash. CME is going to begin offering micro contracts on Nasdaq 100, and the same process can be used on them with even smaller amounts of capital required for margin. Trade at the right time, which is 9:30 a.m. EST for EPA, and I will only buy in superbands during the day and just sell at market the next day on the open. 2. Signals.com at https://www.wealthsignals.com/strategy/details/Etf Pairs Arbitrage -9 IP7VX. That's my whole algo shop with equity curves shown again. At https://www.facebook.com/pg/kccmbwo/shop. See my YouTube channel at https://www.youtube.com/channel/ucia_6tkmtuuo71gpp3pjmnbq, and my company's YouTube channel, BWO, at https://www.youtube.com/channel/uc5hos1cie1jnap2-toa. Also see my Twitter at https://www.twitter.com. Be World Omnimedia, and my CV on LinkedIn at https://www.linkedin.com/in/kccmbwo, and my company's LinkedIn page at https://www.linkedin.com/company/890241. Your best marketplace trading systems provider of 2018 and 2019 by Wealth and Finance International magazine. Bo Valinsky, President and SRO CEO, SEC exempt IA, CFTC exempt CTA, CPO, BWO. C Capital Management, Bo World Omnimedia KCSE. City Stock Exchange MLGP Master Limited General Partner Energy Farms US Partners MLGP. You're right.
That's it. I'm going to have to stop soon, but I'm going to read a post in this form. These are my most recent forum posts. These are the only 2 questions that were asked this month. No one has asked me any anything else about advice for European style line trading. This is a complicated answer. Less simple than the advice for European style.
For Europeans not allowed to trade ETFs.
This is an issue.
Lice.
I lost a lot of
Starter.
subscribers.
December 6, 2019, 1341. Due to European regulations, we in Germany are not allowed to trade QLD/QID, not even SPY or QQQ. Question, how to handle this? One idea, we can trade options on QID/QLD. So I can use DITM options with a delta of above 0.9. Do you have another suggestion? Regards, Dieter. Responses. December 8, 2019, 1336. I live in Sweden, so I have the same problem. I have been using many futures, which for example Commerzbank, Vontobel, and BNP Paribas sell in Europe. I calculate when I buy, so I get 3x leverage. It's not perfect, but I have compared with TQQQ and SQQQ and my results have not been far off. Regards, MTP. BWO. December 21st, 2019, 7:16. Dieter, I can't do anything about European stupidity, which is what it is, really. You'll need to trade futures, which is what MTP is doing and suggested some good brokers, too. Also, Dieter, options should not be traded with Etf Pairs Arbitrage because the duration of the trade is unknowable even if it is estimable. And, MTP, you can go up to 5.63:1 to get the results shown in the back test by calculating your DHLF. But if 3:1 is all you're comfortable trading, of course this is the best method for Europeans to use. Basically calculate the notional value of the future and then divide by 3 for the value of the contract to trade in your account. That's the best advice I can offer because Europeans aren't informed investors in the United States, but I can assure all of you, I certainly am. So MTP has the right approach to trade futures, and that's the only way you can do this strategy. If TQQQ and SQQQ, QLD, QID, and QQQ can't be traded, hey, whoever made the European decision to not allow these instruments to be traded, made a stupid rule when you consider the performance I've acquired here. Even if it is hypothetical, I will release my returns when I have them and do on a semi-annual basis. BWO. December 21st, 2019, 9:25. Guys, for further reference to risk reward, please make your futures trading decisions based on the following: https://www.wealthsugena.com/forums/posts/performance-summary-page-for-highfen-summarize-page-for-hyphen-268. So, if you want 2:1 returns, your DHLF is the point value times either $20 or $2 divided by 2. If you want 3:1 returns, your DHLF is the point value times $20 or $2 divided by 3. If you want 4:1 returns, your DHLF is $20 or $2 times the point value divided by 4, and the maximum risk reward shown is only as high as 5.63:1. So you take the value of the future, either an NQE mini or micro NQE mini, multiply its value by $20 or $2 respectively and divide by 5.63. When you get the value per contract that you can trade, then you divide it into the amount invested, and that is the number of contracts you may trade to obtain the returns shown. These are high-risk ventures, but, ultimately, the value-add proposition is that you get higher returns and less drawdown than the market has in the entire history of QID and QLD, going back to July 2006 when QID and QLD became available. I've traded QID and QLD from March 2007 to 2011 when TQQQ and SQQQ came around, and spent some time as a World Cup advisor trading NQ up to 5x leverage, and that is how I have progressed and why I now have a CFTC exemption as a robo-advisor. This should answer your questions, is that you all understand the leverage of each instrument, but you have to choose and always use that amount of risk unless you have other methods like I do to really go all in. That competitor's website is against TOS, but I do not plan to ever trade futures as a robo-advisor again. And so, with Europeans left to trade only commodity futures contracts, I am mentioning that site simply to inform you that I have used futures to great effect return-wise. But I was a client of PFG Best and was instrumental in prosecuting the CEO, Russell Weisendorf, for stealing $200 million from 200,000 clients who were mostly bona fide hedgers who had no experience with market timing, and unfortunately I did lose a significant sum of my own money and client money that I regretted ever trying to get the returns I earned over the 2.5 years I traded with them at 237% in 2.5 years, and after starting with $24,000 the eventual requirement was more than $85,000, and they terminated my investment portfolio in futures called Quant Master and Pairs Arbitrage. These strategies were the most outstanding performers that Joel Robbins ever had experience with, but because their client base could not afford the margin requirements in most cases, I moved on to wealthsignals.com to offer my algorithm as it should be provided, which is as a WealthLab Pro automated algorithm, and I have not made a single trading decision without an automated rule for over 15 years. Please go to the link, again, at https://www.wealthsignals.com/forum/post/performance-. Summaries page for subscribers to determine risk level 268, and you may determine how much drawdown you can afford and how much return you'd like to get, because that was a very long post that was meant to answer these questions, and I'm sorry if my story offends this webmaster, but the reason for the term DHLF is so you know how much leverage you are using to trade with. Have my price charts up because it's the weekend and my algorithms outside of Wealth Signals run from 6 p.m. Sunday to 8 p.m. Friday, and they are shut down to preserve the multi-deca computer I am using to place trades elsewhere using automation. 28 core 192 GB DDR4 RAM CPU with a GPU that doubles its processing capability at 5 GHz per core. I am fortunate to know the seller of this computer, and he spent his personal time installing it in my house, and he has made my last 4 trading computers since 2007. That seller I will keep to myself, but he is a genius, computer scientist, and economist, and with his help, I have been able to carry on my business, and he is the reason we have a working model on 3 different websites. So, thanks to this man's company we are still operating at full capacity, and until 5 years from now I plan to operate a quantum high-frequency futures flash trading algorithm that nets $1,000 to $5,000 every full trading day off $20,000. So it is an algorithm that is only possible to use with my own capital, and I cannot offer it because it is not scalable, unlike the Etf Pairs Arbitrage algorithm shown here that can handle up to $5 billion of capital with no issues in execution. By referencing this page, anyone with the same European issue can use the descriptor DHLF delta hedged leverage factor to use to calculate their leverage, and in so doing choose the amount of drawdown and return that they are comfortable with. Thank you for offering your solution, and I might suggest bumping it to 4:1, but I understand if you don't want a 60% drawdown and the 5.63 to 1 draws down 70%. So with that in mind, you can see that the APRs are infinite over long periods of time compounded. Digit percentage APR you see should always carry at least 50% drawdown, and when we trade as World Cup advisors we did so with an algorithm that is a trend follower in tandem with the Pairs Arbitrage algorithm, and when they were in sync pointing the same direction we would put on 5x our regular position in what we called either an extra. By a PhD in topology from Stanford created the backtest from the trades lists produced in multi-charts and WealthLab Pro, so that once we had both a trend following algorithm called price physics and pairs arbitrage signal pointing in the same direction, we would put on 2 extra contracts in addition to the 2 pairs arbitrage contracts, and only would use 1 contract for the trend follower price physics. Want to see what that algorithm does now in TQQQ and SQQQ? You can. On the other side, you may be aware I am on because I cannot trade anything but an EOD signal on wealthsignals.com now, so with that in mind I may offer the strategy in futures if it ever becomes possible, and to trade with that algorithm exclusively, because in months where our trend following algorithm and pairs arbitrage algorithm, which is mean reverting through normalysis, were in sync, we had numerous over 10-40+% returning months from doing trades in NQ that way. I am reciting a story I wanted to keep to myself, but because I want new subscribers to use my algorithm, just know I like Etf Pairs Arbitrage better than that, because I am usually sure that I won't be marked as a pattern day trader. Regard to pattern day trading, there may be some cases where we day trade, but they are so rare that it is unlikely I will ever be marked as a pattern day trader. So with that in mind, good luck with your analysis, and just know I put those simulations on the website so that people who are knowledgeable in futures may be able to utilize the strategy here. Guys, if you have any more questions, don't hesitate to ask. I'm watching this page now, and I apologize for not responding sooner, and any others of you who have missed my responses from the last few weeks, I apologize. But I've been nervous about how much I would make, and ultimately I prevailed, earning over $250,000 trading this last trade in TQQQ for the same QLD signal, and it was fairly nerve-wracking to know there might be another tip between the US and China. But for our Europeans, you must calculate your DHLF, how much you want to trade, and for that I encourage you to consider micro NQE minis that at 8,600 points times $2 divided by 5. 3 is $3,055 to match the backtest shown in the system description of Etf Pairs Arbitrage. So if you had $9,165 divided by $3,055 is 3 contracts, and really until your capital is at $12,000 you wouldn't trade more contracts than that. And also why the minimum I recommended and started with was $10,000 is because I want all of you to be profitable when you trade, but also to cover my fee of $100 monthly, which I get 80% of, as you know. I am a CFTC exempt CTA, CPO, SRO, SEC exempt IA in the state of Kentucky, with an exemption that classifies my work in the financial industry as a Roboadvisor, which is my official classification in the Financial Regulator Department of Financial Institutions. So I am not required to be registered, nor did I need to ever be registered doing what I'm doing on this site and the other sites I was involved with. It was just easier to attract an introduction with the Series 3 and Series 65. I passed 3 months after graduating college as a financial economist, mathematics minor, and computer scientist. So that's what I am, is a robo-advisor, and I want all of my European clients to understand that this DHLF I invented as the classification for leverage in the markets is the best way to trade with Etf Pairs Arbitrage, and using these as references for drawdown and APR. https:// be able to assess your risk and be able to trade with me using my strategy in futures. I wish Europeans could use the ETFs, but because they have been plagued by passive robo, as a robo-advisor has the experience to advise on the trading of futures with this algorithm, and not as a per unit basis but as an actual calculation you have to do to make your decision about which contracts to trade, i.e., your only 2 options are NQE mini and micro NQE minis, but you need at least $9,165 to be able to make enough money to trade 3 micro NQE minis to pay for my fee, and that is why this is so scalable. And myself, I use https://www.wealthsignals/forums/posts/performance-page-for-hyphen-summaries-page-for-hyphen-reasonable basis to determine my drawdown and APR, but prefer leveraged ETF trading in TQQQ and SQQQ with a 75 to 78% debt to equity ratio equivalent to a 4:1 leverage factor of 47% drawdown and 80+% APRs. I can't handle the 5.63 to 1. Nor do I want to, and neither will my 2 clients who are my parents, so they just trade at 3:1 in TQQQ and SQQQ and do not want to leverage up because they do not trust the US FCMs, Futures Commission merchants, and so with a once daily update, they know more than 16 hours prior if they will be entering and do not have to worry about slippage when placing their trades as you would if you trade futures, because the atomic clocks of all computers are never quite in sync. But if you're within a few seconds of the open before buying a futures contract, you should produce very similar results to the performance summaries page for subscribers to determine their risk levels and the returns they are targeting. If you have $5,000, you have to trade 5.63 to 1 to make it possible to cover my monthly fees, but that's all I earn from you guys. And so you know my take on capital profits is about 23%, which is something I learned through Joel Robbins of World Cup Advisor, that numerous investors will pay up to $500 monthly for ultra high returns so long as you do not draw down more than 35%, which in the end we picked our drawdown estimates to 35 to 37% and got exactly 36.05%, but were required by the NFA to report to the nearest 0.1%, so it showed as 36.1%, and when we had a 40% month it was like nothing had ever happened. But when the per unit margin requirement reached over $85,000, they decided to discontinue the strategy, not because of performance but because many of their clients were simply wiped out by the fraud of PFG Best, which is a story you can watch on CNBC on the primetime show American Greed. Yes, I was a client of PFG Best and lost insane amounts on the fraud, but had an outstanding track record that ended up being the second highest returning strategy and would have won the World Cup championship easily had I been allowed to compete. But they did not allow to compete because they could see I would win easily, and I was already a professional with an outstanding track record, and that's why I didn't win the competition, but I certainly would have and knew I would have. It's not about woulda, coulda, shoulda, but for me, I paid my clients back through earnout, and now I've minted 2 multimillionaires, my mother and father, after rewriting the algorithm in .NET from WL4's Perl. For the longest time, there was an equation in my algorithm that WealthLab did not bother writing into the software, and within 2 weeks after they re-enabled that functionality, I was able to present my backtest and begin trading on wealth signals. So nothing I've done here is a fluke or fake, but they are hypothetical results, and my live results are obviously higher than this because I am taking more risk but not more than 50% drawdown for an 80% APR I've been easily able to duplicate with a 75% debt to equity ratio. And with all my mentions of other algorithms here, I'll stop for a moment and let you ponder how much you can make with the 160+% APR and 70% drawdown to decide if you all would want to trade at 5.63 to 1, because I don't. I'm comfortable with the 4:1 returns, and I do 75 to 78% debt to equity in TQQQ and SQQQ instead of the 195.5% in QLD and QID in order to save on margin interest, which for me is at 8.8%, and when I'm in a trade I need it to end as soon as possible, because if I had to borrow double my account to buy QLD and QID to get the same returns, that would really eat into my net profit at the end of the year. And I have tried to estimate margin interest using TQQQ and SQQQ with the 1% margin interest rate on a 195.5% of equity position for the 4:1 position, and that's ultimately what the industry has decided is the maximum that anyone should do in the securities industry. So, for our Europeans out there, you may trade my system. You'll just have to use futures and calculate your DHLF each time with apparently a minimum of $9,165 with NQM at $8,600 now. So, that value will only increase, and I am expecting TQQQ to reach $150 next year and eventually split 3 for 1 down to $50 per share again. I have no projections for QLD, I just know that TQQQ will eventually cross over its price, and that will be a fantastic day. I hope we're in the market for when it happens, because when that happens the market structure changes and we make more money because of the shift in pricing for 2x risk vs 3x risk vs 4x risk. Thank you all again for the great year, and I wish I would have answered this question sooner, but all of you Europeans, please move your accounts to reputable futures brokers to trade either NQ futures or micro NQ futures, as that is your only option left to exploit the wealth signals of Etf Pairs Arbitrage. Go long with QLD trades after computing your DHLF, and go short with QID trades again, also after computing your DHLF. Hope this helps all of you, and yes, I'm working on the weekend, but I encourage those of you in Europe to trade either one of these two futures contracts in lieu of the ETFs since they are prohibited, and even DITM options might expire worthless no matter how far you go out in duration since the Etf Pairs Arbitrage strategy cannot use options, so just trade in futures, please, Dieter. And that goes for any Europeans looking to emulate my trading strategy.
Okay, you can finally see that because of the complications in Europe, I'm losing business. And that was an address to the business as if you allow futures, you can still use my system. So I'm going to read the final post from here. And it's not very long, so we're almost done.
Find a strategy. This one. Use of pairs and arbitrage in this strategy. Manat Thamuan. Topic starter. Monday, December 16, 2019, 21:57. I'm confused because the strategy description refers to pairs and arbitrage, but in the closed positions I only see single ETFs being traded. Am I missing something? I was expecting to see a pair of two ETFs. Similarly, arbitrage suggests you'd buy one side of something while simultaneously selling something else, or using an inverse ETF, which also necessitates a pair of securities/funds. So where are the pairs in the closed positions, or why is this strategy considered a pair/arbitrage strategy? If the strategy only buys one ETF at a time, can you tell me what percentage of your historical trades are longs and what percentage are shorts, or an inverse ETF? Results are impressive, but I'd like to understand more. Thanks. 3 responses. 1. BWO. Saturday, December 21st, 2019, 7:11. Hi, Manat Thamuan. I've answered this question before, but the shorthand is that because QID and QLD are inversely related already, you don't have to short the other and can just go long the undervalued. Hence why I say I call it my favorite in my Wealth Signals interview. The percentage is about 80% longs, 20% shorts, with shorts being more robust per trading day than longs, and in terms of duration longs last longer and shorts are typically less time in the market but just as robust. Basically, I am using a pairs arbitrage statistical method, and because I recognize that you only need to go long the undervalued, you are already short synthetically in the overvalued by buying the undervalued. Thanks for the compliment. It's a culmination of technological advancements that even allows me to communicate with you about my strategy. Just to be clear, I am using the terminology to describe my strategy ETF pairs arbitrage correctly.
I've had this
0.
so many times
BWO.
it's not even funny.
Monday, December 23rd, 2019, 22:57. I guess you're missing that QID and QLD are the contras to each other and move nearly perfectly negatively. That's what makes them pairs, and so by going long the undervalued you are short the other and don't need to place an order to go short in the contra of it. That's why it's pairs trading, and I trade from the charts of QID and QLD in one window with signals from both symbols. With that in mind, without giving away what I do, pairs arbitrage starts with statistical analysis of the ratio of QLD to QID, and that is why it works so well, is because QID and QLD will always be nearly perfectly negatively correlated, and you don't have to short the overvalued to be long in the undervalued, i.e., by going long the undervalued you are already short, and it should be obvious that QID and QLD are the same as SQQQ and TQQQ, respectively. So if that answers your question, please mark this as solved and close the topic. 0. BWO. Monday, December 23rd, 2019, 23:05. Everyone, of course, can make a ratio of any two symbols, but what happens beyond that is many hundreds of thousands of calculations I'm not going to describe because they don't require description beyond the results that were and are presented. The conditionality of my algorithm is that you have to use negatively correlated securities to use the algorithm, and when I was working with it doing my first Perl code of it, it had to check a list of thousands of symbols that were spurious correlations. First off, and not ever close to the level of negative correlation that will always exist in QID and QLD, so you can trade SQQQ with the QID signals and TQQQ with the QLD signals, and that's why I'm saying it's not millions of calculations but it's hundreds of thousands of calculations only an automaton circminaton can perform after genetic optimization using the ratio I wrote for WLP users called the average profit to drawdown ratio.
That was the whole month, guys. I spent a whole month ignoring those questions just to come 275K ahead. So, went from mid-November to December 19th, I made 275,000. So I might as well add a minute here to talk about what I presented was a Quora response, my Quora profile mostly, and then all the links that you would normally read in reading my Quora profile. So by reading my Quora profile, eventually takes you to wealth signals, and C2 star app is basically just numbers, which I'm not going to read, but maybe I should one time, but I'll read the description some other time. That was mostly about wealth signals and my experience in the financial industry. I didn't mention the CFA curriculum because I'm no longer a candidate. So I had to retake level 1, and even when I take level 1 again, I don't think I ever will. I'm exempt. I have the robo-advising exemption 401A3C. That's what exempts me as a CFTC exempt CPO and CTA. Therefore, I'm SEC exempt, and I run an SRO called the Kansas City Stock Exchange, and I've also obtained a $30 million loan to run Energy Farms US Partners LP, a wind turbines operation in Kansas. So that's who I am as a robo-advisor, and if you've listened to this for an hour and 15 minutes, I appreciate your time. Thank you for listening. I'll stop this at 1:15. Thank you. I'm Bo Walensky. Guys, happy holidays. Merry Christmas. These are very expensive pajamas from Sheiks.com. And yes, I'm a pajama trader. I've only traded 12 times this year, Jim Cramer. So that's my message to CNBC is that please take it easy on the pajama trader comment, because I'm getting offended by it at some point. That's why I don't like watching from 4 a.m. to 6 p.m. I usually turn off Mad Money because it's just Jim promoting his charitable trust so you can subscribe to people like me when you really should be working with me. Robo-advisors who have 700% nearly returns in the last 5 years. So thank you for listening. This is the end, and Merry Christmas.